Raising financing under favorable conditions proved to be particularly challenging in 2024. This was especially true for companies without approved products, compelling late-stage datasets, or a steady flow of news updates. Looking at our coverage of Benelux and French companies, several were operating with less than a 12-month cash runway, and only a select few managed to secure funding through traditional methods like ABBs, for example. Consequently, share prices for many of these companies took significant hits, even when they reported positive program developments. Adding to the pressure, institutional investors are increasingly shying away from small and mid-cap names due to the concerns about liquidity constraints. On a brighter note, despite these challenging market conditions, the Benelux ecosystem continues to foster exciting innovation, with numerous promising drugs and product developments making strides forward.
Last year we saw close to 40 biopharma transactions, out of which half were in the $1 to $5 billion range, but none exceeded $5 billion. In terms of IPOs, we saw some activity there, but clearly no market rush yet. And it's interesting to note that half of the companies that IPO'd in 2024 are now trading below their IPO price, which highlights the tough market conditions. In terms of therapeutic focus, oncology and immunology again stand out as the clear areas of focus, and we also see neurology gaining some traction for quite some time now. If we look at the medtech sector now, slowing organic growth combined with mounting margin pressure have clearly driven M&A activity throughout the year. In terms of therapeutic areas, we saw cardiovascular, but also surgical robotics stood out. And in terms of IPO for medtech, well, the market was quite inactive with only 5 IPOs in 2024.
Several M&A transactions have already been announced in January, including Johnson & Johnson's acquisition of Intra-Cellular Therapies for approximately $15 billion or so, which is the largest deal since 2023, by the way. This trend looks promising and may indicate a growing appetite for larger, more transformative M&A deals. Additionally, billions of dollars from big pharma still need to be replaced due to imminent patent expirations.
We expect 2025 to be a year where macroeconomic factor will overshadow fundamentals in driving sector performance. And after 3 rate cuts in 2024, there is speculation about another cut in March or May this year, and we will remain in the lookout for that, since inflation and interest rate numbers traditionally steer the sector due to their impact on valuation, but also on borrowing costs. And apart from that, we also expect some volatility from possible decisions from the Trump administration, also possible drug pricing reforms or any change in the FDA. So stay tuned for another eventful year.